So all those things are negative on the margin, I think, for subscribers for Q3 and their guidance for Q4. But the thing with the guidance for Q4 is we have no idea what they're going to guide to and how they're thinking about, what the ad-supported impact is. If they're smart, they will be conservative, right? Because they want to manage expectations. I still don't think it's going to have a huge impact ultimately. I think there's going to be a lot of cannibalization, and there's definitely a wider variance on the guidance for Q4 than there typically is. But the data doesn't look fantastic starting the quarter going into earnings tonight. That's all the data. Like I said, it's kind of playing out like I thought. The market share dynamics are a lot worse actually than I thought. In terms of the Nielsen top 30. So we'll see how that plays out.
Timely update, Andrew. I mean, that's obviously some recent scar tissue on Netflix here. So what's your take on expectations going into the print? I mean, it's obviously the Q1 print. This thing fell out of bed, but it could be down another 35% to get back to where it was for, following that report. It sounds like things are slowing.
The only way, the stock is up, the stock goes higher if they either beat on subs for Q3 or they guide higher for Q4. They're at 1 million, just over 1 million for Q3. On consensus, that's their guidance. And then the FactSet consensus is just over 4 million for Q4, which looks high to me. I think that not a lot of people are there on the short side going to this earnings event like it was last quarter. Like last quarter, it was just a terrible setup. Obviously hindsight's 2020. But this quarter, I think there's a lot more optimism. People are more bulled up on the ad-supported opportunity and kind of the turnaround thesis. And I think that a lot of the shorts have kind of just moved on to other things. But if I look at the stock, it's trading at kind of this at 250. It's trading at this high teens EBITDA multiple, where I'm still kind of below the street. And it's really hard to see how we get significant multiple expansion, especially in this environment, which you need to get a stock that's going to be, call it $300, high 200s, 300 to get back up there. And I don't see it. And again, I can get a stock that's easily back down to 160, if not lower, if we turn out to be really, really right on the thesis. But definitely, sentiment is more skewed to the positive, while the data for Q3 is coming in negative, and nobody's expecting them to miss Q3, which means that they're going to miss Q3. That's just how this stock works, right? It's just every time.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.